And we're live.
Totally. Did it stay in?
Yes, it actually stayed in. Congratulations. You actually found the pitch, the perfect, maybe, new layout and everything else. I guess that kind of like played into it. So,
it made me, I'm drinking cold water. I normally drink room temperature water. I don't know if it has anything to do with it. And I don't know if it can be duplicated again.
I think it can. I think you will. I think, it's interesting because most singers, they sing with room temperatured water and maybe add in a little bit of lemon or honey or like some tea or something like that. So, I mean, hey, the voice has awoken. So,
yes.
All right. What's up, everybody? I'm Mark Monroe, accompanied by my friend, co-host, co-creator, the wonderful
Jolene GC in the place to be. And I am excited.
Me too. And, I'm feeling very cultural today.
You're feeling cultural and I'm feeling super militant.
Hey, so I think that's dope. I mean, cultural and militant. I mean, with history, I'm wearing history today. Shout outs to my alma mater, Tuskegee University. It isn't Founders Day or anything like that, but I was just feeling it. And then my wife got me this shirt called "Straight Out of Tuskegee University."
Wait, lean back a little more. Lean back a little more.
All the way back.
Okay.
Yes. So we're here. We're doing our thing, and so I am so ready for it. Are you ready?
I'm ready.
All right. So if you haven't subscribed, there's this button down below. Go ahead and hit that subscribe button. We'd definitely love to have you a part of the cookout and become one of the cousins. And on top of that, if you like the video, go ahead and hit that like button. If you didn't like it, that's fine. That's okay. Just go ahead and let us know what is it that we could have done to do better. And then on top of that, if you want to be in the know, go ahead and hit that bell. It's, it sends a little ping signal. So that way, when the signal flashes in the sky, everybody got it. So that way, when we drop new content, you're a part of the Cool Kids Club. So, Jolene. Oh, okay. I see that we making some adjustments to the.
Okay.
On brand?
Yes, on brand.
Okay. So, Jolene, all right, let's get some of that. Let's get some of the housekeeping out of the way. How do we do in today's markets?
Yo, what's up? Okay, first of all, it is Hot Take Thursday, and the market, at least in my portfolio was hot. I hope y'all's was too. We got the Dow. We got the Dow coming in at negative 7.10 points, and then the S&P 500 was up a little bit, 6.50 points, and the Nasdaq was up 53.24 points. The VIX, aka the volatility index, was at 21.25. Now, bringing it on over to sector performance, it breaks down. We track the top 3 and the bottom 3 out of 11, and we have tech on top. Y'all know how I feel about tech. I've been waiting for tech to, stop playing games.
Coming through like coffee.
So we got tech, health, and materials. And then our bottom 3, consumer staples, utilities, and energy, which is okay with me. That's, hey. So for the pick performance, we have 37 SIPs now. And you can find those by going to our Instagram page at That Come Up Series. You go there and you can find a post that has all 37 winners. Number 1. Lamb Research. Lamb Research has been showing out.
Hey.
Showing out. We got C-Web with a 52-week high, and we have Taiwan Semiconductor with another 52-week high. And then for the bottom 3 is Netflix, Teladoc, and XPO. Now, what's really cool, see, I had to wear yellow today. There's a reason why. Oh, and you got on yellow too, Mark. Well, there's a reason why. Because on my CNBC app, and when I track all of the picks, the ones that have 52-week highs are highlighted in yellow. So let's get into this, because look, SDGR, SMH, My Stock Bay, Many of you have SMH. That's great. Good for you. I'm proud of you. Because SMH really just does not play. Then we got SNPS, synopsis, NVIDIA. Finally, wait, let's pause because NVIDIA, there was some turmoil with NVIDIA. There was a lot of consolidation. We had to wait for all the sellers to exit stage left. And then when they got out the way, you start to see that staircase to heaven. Just trekking on up. So shout out to NVIDIA. I moved on from NVIDIA, but I'm still happy for NVIDIA. And actually, I still have exposure to NVIDIA.
Okay.
We got Square. So shout out to FinTech, Visa. Shout out to Q. We got Datadog, FDN, Disney, Twilio, and Zscaler. Those were all of the 52-week highs on the Come Up series pick list. Shout out to all of our Come Up Cousin analysts who pitched like crazy on Tuesday. Y'all really did it, and it shows. Your work shows. It speaks for itself. Mark, how are you feeling about Black History Month so far?
I am very much so like I would love to see a little bit more, but so far so good. So far so good, I must say. And I'm really on this thing where I'd love to take Black History all the way to Juneteenth.
Yeah, I feel it.
So forget just the month, but let's just do something in which that even if it's just for each and every single one of you, like we're going to bring up heroes every single time that we're on the show. And you never know, I may even do something in one of my episodes. But we want to shout out each and every single one of the ancestors or as many ancestors as we can to honor them. And you can do that also by, say, for example, like just giving a shout out to the folks in whom which that raised you, the folks in whom which that are the unsung heroes. And hence the reason why we're here today. I mean, they are also a part of history. Why? I am because we are. And so if that's the case, then, I can't be without the folks in whom which that paved the way for, us. So.
Well, our historian. Our Come Up Cousin historian, Brian.
He dropped us another one?
He did.
Okay.
And it's my girl, Harriet. There's someone else too, but let's talk about Harriet first.
I knew it. Like, we're here. Let's do it.
So Harriet Tubman, born Araminta Minty Ross in Maryland around 1822, Harriet adopted her mother's name after escaping slavery. Harriet Tubman was an American abolitionist and political activist. Born into slavery, Tubman escaped and subsequently made some 13 missions to rescue approximately 70 enslaved people, including family and friends, using the network of anti-slavery activists in safe houses known as the Underground Railroad. This number does not include the upwards of 3,000 enslaved people she freed during her missions as a Union Army Scout. She avoided cops, dogs, mobs, bounty hunters, and slave catchers. She and her escapees slept in swamps and moved only at night. Once with her on the railroad, she threatened to kill anyone who lost their nerve to escape. Shout out to the gun. She even once had to drug a baby. She once told a man, "You go on or die." Known as the Black Ghost, the bounty on her head was at least $12,000, which is equal to around $330,000 today. Aside from helping her family and others escape slavery, she led troops in combat, cured a disease, and was generally way more badass than history generally portrays her. She was the first woman to lead a combat assault. While under the command of Colonel James Montgomery, Harriet Tubman led 150 Black Union troops across the Combahee River in South Carolina in June 1863. Using information from escaped, formerly enslaved people, she led Union riverboats through Confederate torpedo traps, freeing 750 enslaved people and dropping off Union troops. The troops burned the estates of influential Southern sectionists who supplied Confederate forces. She didn't lose a single troop. She was buried with full military honors. And here is a quote from our dear ancestor. Every great dream begins with a dreamer. Always remember, you have within you the strength, the patience, and the passion to reach for the stars to change the world. Awesome. Now, we like to, keep this energy balanced. So we got Robert Smalls, from enslaved person to sailor to Congress. Robert Smalls was an American politician, publisher, businessman, and naval pilot. In the midst of the Civil War, this Black male enslaved person commandeered a Confederate ship by disguising himself as its captain, used secret hand signals to bypass Confederate guard ships. He then delivered the ship's 16 Black men, women, and children passengers from slavery to freedom. On top of turning over the warship, ammunition supplies, and cannons to the Union Army. After the Civil War, Smalls returned to his native Beaufort. He bought his former master's home, seized earlier by Union tax authorities. In 1868, Smalls was elected to the South Carolina House of Representatives and later to the South Carolina Senate. In 1874, Smalls was elected to the U.S. House of Representatives. As a member of Congress, he fought against the disenfranchisement of Black voters across the South. Here is a quote from our ancestor. My race needs no special defense, for the past history of them in this country proves them to be equal of any people anywhere. All they need is an equal chance in the battle of life. That is Robert Smalls. Y'all, shout out to Black history. Shout out to South Carolina. Shout out to the strength running through each and every one of us. And shout out to the dreamers.
For sure. Okay. Yo, I mean, did you check out the title today? Like,
yes, it's all about being legendary. So, Mark.
Yes.
A little something about being legendary or whatever. So,
I'm just trying to be a legend in the making over here. Just trying to do it the right way. So, I think with that, I think it's time for another come up school of investing session. Don't you think?
You know what? I was wondering when class was coming back.
I mean, it's a whole new semester.
It is a whole new semester.
But, we noticed that there may be some new cousins that may have come into this semester that are just like, whoa, wait a minute. Did I sign up for the right class? Like, yo, am I even up to speed? Like, what's happening? And then on top of that, we may have some cousins that have been around for a minute, but yet at the same token, it's like, yo, last semester was pretty long. And, there was a lot going on last semester. So I was kind of thinking that maybe we should start like this semester with, a refresher.
I'm here for it.
But with a twist.
Okay, I like twist. Yo, why does our chat always what is up with that?
Wait, are you getting anything in your chat? Because clearly I'm not seeing anything.
Oh, and I missed the cousins. Like, what is going on?
Tell me about it. I have no idea what is going on. We may have to actually reach out to YouTube and be like, hey, what is up? Because this is not even cool.
It's not. But you know what? We're going to soldier on.
We shall. All right. So for those of you, and while I'm doing that, I'm multitasking at the same time, trying to figure out what is going on with this live chat. Because apparently, I don't know, YouTube is just acting like, they're not for the cause. And we know that to be a little weird. So yeah. All right. So interestingly, I know, right? We're over here yo, what is going on with the chat? Please initiate the chat. All right. So I'm going to do this. I'm going to do this and then allow let's see if that restarts everything. So I just restarted the chat just in case.
Okay.
I'm trying to be great over here on this side, while also at the same token, get some things going. So hopefully that shall restart the chat and everybody can literally be a part of the conversation. If not, hey, that's okay, because you're going to have a lot of writing that you're going to need to do. So get your pen and papers ready, because you're getting ready to go through a legendary course today, in which that, really, I had the opportunity of doing this during the conference for the Master of the Trade conference.
Oh yeah.
But I felt like, honestly, I would be remiss if I didn't take this to a whole new level. So there's going to be some things that are going to be discussed in this. There's going to be some new things, and you never know, there may be a surprise somewhere in the.
Okay.
All right. So without further ado, let's get it started, shall we?
Yes.
All right. Let's talk options.
Oh my gosh, who is that?
Let's talk about it. So a lot of times it's like, so let's just roll the clock back, for those in whom which that want to know what options are, they first originally started off as derivatives back in the early 80s. And essentially they started to become even more popular in really like the early / mid 2000s. And then now it's really the ways and means of how is it that you see a lot of companies or a lot of institutions buy exorbitant amounts of stock. So which means that, you trade an option, then you can exercise that option. You can pretty much buy up large quantities of shares. Okay. So let's get some housekeeping out of the way, shall we? First things first. Our mission statement here at the Come Up series is very simple. We believe that the game needed change, so we decided to make sure that the culture would be the cashier. So which means that we give you all the knowledge, and each and every single one of you play cashier by taking this knowledge and going out there and building wealth for your future generations and your current family. I mean, sounds pretty dope, right? Simple, easy beasy. Have fun, go mad. So here's what's on the basics for today. First, discuss a little bit about who am I. I guess I'm going to have to. If you never met me before, that's fine. And then we're going to go through some of the other pieces. I'll breeze through it pretty quickly, just, so that way we can get to the actual stuff. All right. So who am I? I'm my ancestors' wildest dream. That's the first thing. My 9 to 5, I don't have one. I invest in early stage startups for now that I look forward to my legacy living in one day. So I invest in things in which that one day the legacy that continues on my name will it will be their norm. So my focus is always on the future. I'm an options trader. I'm 17 years in the game like LeBron, though I think that he's probably 18. So that could possibly be a little bit of a typo, but neither here nor there. I started trading options my freshman year in college in an old Tuskegee University dorm room called Bethune Hall. Shout out to any Tuskegee University students. You understand my plight. You understood that living in Bethune Hall was definitely real. So there that is. And on top of that, I believe in something simple. I give away the game for free. I just do. I mean, other folks do things different, but here at the Come Up series, we believe by that mission. So in order for the game to be played by each and every single one of you as cashier, we don't collect a dime. And that's how it's always going to be. My biggest trade loss was in 2018. I lost 18.2 million. Yeah, that actually happened. It sucked, but I made a way. I made more than I've actually lost. And that's the dope part. All right. So with that all being said, let's just get it down to the basics in the sense of, in order to be on this legendary journey, what is your motivation towards being legendary? I mean, if you don't have the motivation, then honestly, you won't really get behind what you're doing. So it has to have some type of purpose. And that gives the reason everything else itself will follow. So did you know that you can trade options long-term with a lower risk and less stress level? Surprise, I do it every day. And so, well, not really every day because I don't really have to be pushing the button every day. So okay, so another stat. Did you know that 98% of traders lose 100% of their portfolio by just trading on speculation over time? Why do you think that's so? Like, think about it. Like, there was an article on Business Insider the other day, I think it was today, about a trader that was trading on one of the brokerage platforms and how they kind of got so sucked into it, and they were on, one of the websites where they were getting a lot of speculation and everything else, and they just kind of bought into the hype and everything else, and it became their addiction. And then they took something in which that they saved up 6 years for and then made short-term trades, and they lost 100% in a matter of a few months. Crazy, right?
Yeah.
So the game plan that we believe here at the Come Up series is very simple. You study and assess. So how do you do that? You build a trading plan. And what we believe a trading plan is a method for identifying and trading that takes into consideration a number of variables, including time, risk, and your objectives. If you really don't have an idea as it pertains to the amount of time that you're going to put towards your learning, if you don't have an idea as it pertains to how much risk you're going to be putting into the market, and if you don't have any solid objectives, so for example, having a game plan for before you even step into a trade or any investment of when you're going to get in, when you're going to get out, then honestly, it's like going into something without a plan is like having a plan to fail. So what is it that we do that's a little bit different from everybody else? We trade on the long term. So did you know that a 1 to 2 year options trade is pretty much better than 5 to 10 years worth of stock gains? Now, I'm not like poo-pooing on anybody who owns stock out there, because by all means, it's like, even in my portfolio, 20% of my portfolio is stock. But I do believe that when you see this math, you'll realize that it's just different. And then we say that once you have those things and you're executing based upon those strategies and in that game plan, then now you're ready to go out there and change the world. Hence, we introduced the new Roaring 20s. We did that last semester, but for those of you who are just getting caught up, that's fair. So pretty much with your discipline, you created generational wealth. Now create and rebuild the communities. That's it. That's literally the payback for the Come Up series. It's actually always been there all along. You just repay the culture by helping rebuild what was once lost or taken away or what never existed. I think that's simple, right, Jolene?
It is.
All right. So think of options like a lease option to own a home. Some man said that. And so pretty much when we say like, think of that, like that option, think about it like this. For those of you who want to understand options, if you want to go buy a home and you don't have you don't have all the capital to buy this home, you pretty much would do, say, for example, if it's available, a lease option to own. And with that, that gives you X amount of time, but then there's also an expiration. And by that time, you've already signed this contract just to say, okay, hey, I have the option to buy this house at this price. So let's say that this house is $400,000. Now, 2 years go by and the market appreciates and this house grows in value. So now the house is no longer 400K, it's now 600,000. Well, in this regard, you would be buying a home at $400,000, but walking into it with an extra $200,000 in equity. Now you have the option to execute on that, or you have the option to walk away. And the only thing that you lose in this is that what you put down, or what is it that you've already put into play for buying this house. Now, think about the same thing when we talk about options. You have the option to buy or sell this contract. So now you just have the option to also sell to somebody else. And essentially you could just take the profit. Now, if you're doing a trade and if it goes in the manner in which that you expected it to, then it should gain value. If it goes the opposite, then it loses its value. The only thing that you lose in options is what is it that you put in. So there is no negative, there is no owing or anything like that. It's just really what you put in, the capital that you put in is really what you lose. And essentially your potential profits, I mean, they're infinite. Okay, so I know I just said a lot, but let's just kind of do a breakdown of such a position, shall we? Because I feel like this is very, very crucial. So let's just say that XYZ, that's the stock ticker. So that indicates the stock. And then let's say there's a strike price of, let's say, the 70. So that 70 represents the strike price. And the strike price is pretty much what you say that the stock price is going to be at, or where it could be exercised at, if you decide to, say, for example, exercise an option. And then let's say that thing where you see $3.10, that's the premium or per share cost of the option. So if you think about it, $3.10 per contract. So every contract has 100 shares. So you would take the $3.10, multiply that times the 100 shares, and boom, it's $310. That's how much you pay per contract. So every contract is going to cost you $310. Now there's some other information here. There's this thing called a call. That represents, you can either do one of the two things at basic level, a call or put. A call says that you're saying that the stock price is going to go up to a certain value at a certain strike price. If you're saying that you're doing a put, you're saying that the stock is going to go down to a certain strike price. And then when we have this expiration period, that's called the expiration date. So which means that you have X amount of time until this date by the close of the market that you have to exercise this option. If you do not, then the option itself expires. Even if you're in the money, when we mean by the money, that means that, let's say that your strike price was 70. and it goes up to 80. Well, you're already in the money because it's already crossed to 70. So then most likely it'll probably just expire. In some cases, you have some brokerages that will try to execute you if you have enough capital, but for the most part, if you don't, then it'll automatically just sell it off. Some brokerages may be nice and say, hey, we're going to just execute it for you and sell it off for you, and boom, done. And that's literally how you break down what a position looks like. No matter what you do across the board, all your positions throughout your brokerage will look exactly like this. Kind of cool, right?
It is.
Okay, so let's put this into practice. I like to take Apple because everybody knows Apple. So you say that Apple will reach $150 in 2 years. This is very interesting. So let's take this options trade, and we're going to say that, for example, we're going to look at the two, and just to show you how is that they different. So you have $10,000 on both sides. Now on the stock side, Apple share price is at $100 per share in this hypothetical world. I know, such an opportunity. Yo, this is the jug right here. So I'm going to take the $10,000 that I have, and I'm going to divide that by $100 per share. That equals 100 shares. Simple math there. And we'll get to the option side. So remember what we said. Options contracts, one contract, we'll say that it's at $1. So the price for the contract, the premium is $1. And remember, there's 100 shares in every contract. So we're going to say 100 contracts times 100 shares equals $10,000 at $1. Because remember, $1 times 100 shares equals 100. 100 times 100, that equals 10,000. So at this point in time, both of them are pretty level. So then we say, let's say the stock in 2 years goes up to 165. So then you're going to take that 100 shares, you own those, and then $65 a share, because we already know what the 100 is. We're just going to take the profit side. So the $65 times the 100 shares that you own equals a 6,500 gain. Not bad. Now let's say, for example, that the Apple stock has increased to $25 on the option side from $100, and the cost of the option contract, the premium, has now increased to $4. So then you take the $4, because now your premium is now $4. So 4 times 100 contracts, so 100 shares in every contract. So that's 400 times 100 shares. That's 400, or that's actually 40,000. So 400 times 100 equals 40,000. So what you just gained there was $30,000. And as you can see clearly, that's how the money is different. Now, how is that calculated, right? Like, how do we put all that together? Glad you asked. Now, I went to a Black college. I'm not a part of any of these Greek organizations, but there are some Greeks that I do know and love, and they definitely make me a lot of money in the process for me to do some pretty cool things out there in the world. And there's 3 that matter in the book for you to really just pay attention to, and they are delta, gamma, and theta. Now, delta measures the price movement, so it shows you the price movement of, say, for example, that option. And here's another thing that delta does. Delta is so cool. You know why? Because not only will it show you the price movement, but it will also tell you the probability that that option can end in the money. I mean, I'm all for that. What, you know?
Yeah, hello.
Okay, so then there's this other thing called gamma, and gamma measures the rate of change of delta. We're going to get into that in a little bit. So, for example, delta starts on the first dollar. Gamma picks up on the second dollar and every dollar that follows after that. Now, there's this other thing called theta. So theta measures the impact of change in time remaining. So which means that we could typically call theta the time decay. So which means every day that the option goes on, then essentially theta is subtracted from the options contract or from the options premium. Okay, so how do we put this into practice? Let's calculate some movement. So say, for example, you buy 20 contracts of SMH January 2022 at $24.70 per contract. And the delta for this is at 45, let's just say 45 cents. And we'll say the gamma is pretty much at 0.006 and the theta is at 0.03. So here's how we calculate it. Let's examine the delta first. So then the first thing that we'll look up is examine the delta, since there's say for example, $5, if the stock goes up by $5, then essentially we're going to say that their $5 times 45 equals $2.29. So for every dollar the SMH stock gains 45 cents in delta, it's applied to that options premium. Sidebar. Currently, it's at 45 cents. It's at a 45% chance that it will expire in the money. Now, of course, as the gamma gets added to that delta or gets added to this equation, then that probability percentage goes up. So we call that the gamma, aka gamma radiation, the Hulk up. And so with that, this is applied. This gets applied after the second dollar is made on that SMH stock. So hence the reason why we only have $4 there. So which means that brings up the gamma by 0.24. So which means that we will add that into, as you can see in the formula. Now there's this thing called theta, the keeper of time. Remember that. So every day that this position remains active, theta will take away 0.03 from this position. Think about theta as if it's like the hourglass. Like, so for example, you're running out of time. And as the sands of time are moving, you've got to, like, your position's got to mature, or it's going to pretty much fall apart, which means that most likely you didn't make the best of trades. So which means that it takes away, say for example, it takes away 16 cents per contract. So now we have it where essentially over a $5 movement, we went from 24.7 to now a 27.18. And that's ultimately how you were able to calculate, say for example, the movement in, say for example, the options premium.
Nice.
So, for example, one thing that you should go look at, maybe just as an example, is Apple 150 call January 2022. Yeah. Just for that, that at the beginning of last, semester was the new math. But we're not done. Oh, no, we're not done. So a lot of times we hear this thing called FOMO, where everybody wants to jump into this, they want to jump into that, they want to do this, they want to do that. And this is where it comes into you having a plan. So one of the things that we always say is like, don't give seasonal trades lifetime expectations. Meaning, so for example, if you're in a position for 3 months, you can't give that 3-month long position a 2-year you can't give it 2-year expectation data. It's just not going to work. It just doesn't compute. So 9 times out of 10, if you're playing anything on the short term, you're playing it with the understanding that it's purely a technical or a momentum play. I mean, that's just flat out what it is. So here's where it comes into play. FOMO is like a form of greed because you're getting greedy while you're trying to trade. And when you're doing FOMO, and if you're trading on FOMO, then that means that you don't have a plan. So this is where we start off with stick to your plan. This can go for both traders in the options market as well as for stock investors. So here at the Come Up, we have a 0 dropout rate. Nobody drops out in the Come Up series. Like, that's not acceptable because we believe in one simple thing. It's an initiative that started off way from the very, very beginning called No Cousin Left Behind. And it's a strong initiative in which that we believe in and we stand by it. It's like Pepsi. It's our brand. So, like we said, and to quote one Miss Jolene GC in The Place to Be, called Free, FOMO is not a strategy. Never has been, never will be, so don't do it. So let's talk strategy. Let's start with what was. Who were the winners and why were they winners over the past 2 years? What were their catalysts that made them winners? So we could probably see some of the companies over the last few years and say, okay, hey, well, this company's been running. You can see it's easy to look at their stock chart and say, okay, hey, well, this company seems like it's a good company, but do you know why? What was the catalyst that made them successful? What were the things that caused those jumps in the stock? What got investors so excited behind the stock that they wanted to go and put their hard-earned capital? And then once you have that kind of understanding of a narrative, then we start looking at something called what will be. And the what will be it takes a little bit more research because it requires you to go a little bit deeper. You do your research on the world's future first, learning from what was to then understand and vision what will be. So for example, if we understand these are the things in which that this company was doing or the sector was doing that made it successful, now we focus on the things in which that, okay, hey, we should start seeing parts of the narrative where it kind of points us to where is it that they're going. If you ever want to invest in a company, and if you find out that you cannot understand exactly what their will be is, then that's kind of a challenge. And I'm going to show you a company today so that way you can kind of understand the narrative a little bit. Now, if and or what. So when setting up your trades based upon what was, pick your trades if and on what will be over that period of time. So if what will be is the strategy and that's why you're investing or that's why you're trading, then you have two picks. You have a primary pick and a secondary pick. These are like your mainstream picks, like your starters. Now, if that thesis is falling apart and you're starting to notice that's falling apart, then this is where pivot plays really start to come into play, because then this is where your or play comes in. And then this is like your fallback. Like think about it like going to college or picking a school or whatever it is, or car. You have your car or your schools in which that you really, really want to go to. These are your go-to. But if these things do not work out, then you have what is called a fallback. That means that, hey, all the mission has been aborted. Now I have these. And then that's where pivot strategies come into play. You pick your or. So if the trade isn't working, then the pivot play goes into effect. There's no overthinking it. There's no getting emotional over it. It's just like, okay, hey, I've got to move, because what we care about is the portfolio performance management, though we've got time. So in doing that and setting up your capital, we introduced also in semester 1 called the rolling fours. Now, rolling fours was really to help establish some form of discipline. It was something super duper, like, kind of like a new somewhat concept to the culture. And we felt very, very proud of it. So what was it? It was really made to focus each and every single individual on discipline, because discipline is everything. No endless trades necessary. So essentially it was very crucial. Like I said, here it is. You deploy capital 4 times a year and to trade 4 times a year for 3 years. Let me run that back to you. Every quarter, you deploy capital into the market, which is the equivalent of you making 4 trades over the next 3 years. And then the other part of that rolling fours is learn to live with less to prepare for the walk away. So, which means that a lot of times in our lives, we go through this habit of living in a world of excess. And then when you look around your room and see that, okay, hey, how much of the things make you money, or what is it that you use? I'm probably sure that there's a lot of things that sit in your home that you probably never even thought about. Like they just sit there as an afterthought and they're just collecting dust. So get to a place where you invest 70% of what you make for 3 years. Then if you do this correctly, you can walk away. There's a strong chance that you can walk away from whatever it is that you want to do and just go be free. Because why? You learned how to deal with less, so which means that you don't need that much higher of a salary, which means that what you did with that higher portion of the salary, you saved it and you invested it. And then on top of that, you developed a discipline because you know how to deploy capital. You don't need to go chase everything. So you stuck to a script. Then we had SMART goals. And those are pretty much, you set those goals, you execute. So a SMART goal has to be specific, it's measurable, attainable, relevant, and time bound. Let me give you an example. I want my portfolio, my 4 options trades to be, say, for example, in the focus of technology companies that I'm going to trade. And I'm going to measure them by setting benchmarks of about, let's say, 100% return on average for all of them, very base minimum, but also have a stretch goal in there and saying that, okay, hey, but at the same token, if it reaches at this 100%, then I start giving it the side eye and start setting a 10% trailing stop. Now, of course, this can keep going up to, like, let's say 400, 700%, whatever it is, astronomical, but I'll just keep adjusting accordingly. And with that, these positions will probably take place over a 1 to 2 year span. So I won't do any short-term trades in the process. That right there is a SMART goal. All right, so let's talk about this walk away. Let's get a little bit further into the weeds, shall we, Jolene?
Yes.
Okay. So when we think about the walk away, you can actually set it if you're doing 4 trades and this is just a simple example. You can set whatever months you need to do that help you out. So you can set, for example, March, June, September, December. Now, all of that together is just 10K. So 10K each quarter you put in. Now with that, let's check it out. In year one, that reached a X return. So which means you turn 2,500 into 10,000. This position turns into 10,000. So altogether, you went from 10,000 to 40,000. Then the next year, you take those same positions. Now, mind you, this is just the first roll. So this is not even including if you're deploying more capital year over year over year. So this is just if you just did one time for 1 year and just deployed capital. So then in year two, this means that you got a 3X return instead of a 4X. It kind of you measured it off a little bit. You said, okay, hey, I'm going to get a 3X return. So 3X or 4X is like an equivalent of let's say a 300% return. And yeah, you get my drift. So 30K, 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 30K. So 30, 60, 90, 120. So now you got 120. All right. So then that's you went from 40K to 120. In year three, you did the same thing and now you deployed. And mind you, these are rolling over each other. So they're not all happening at the same time. So then you went from another 3X, 90K, 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 90K. For those of you that are like, okay, hey, these numbers are getting a little bit too astronomical, that's 360K that started off from 10K. That's just that first roll and you being consistent. So something to know about options traders. Great options traders know technical analysis. They look at charts and have indicators in which that they use religiously, like breathing. That's dope, but they don't really know fundamentals. So typically you see those types of options traders, they're typically doing like your day trades or your weeklies or sometimes monthlies. Dope options traders know technical analysis and fundamentals. Not only do they know and not only do they understand the charts, but they also know the company's DNA, the financials, the management, the narrative. It's funny because how many of you like invest in companies that you don't even know who the chief level talent is? So outside of the CEO, who's the COO, who's the CFO, who's the CTO? Also, who's on their board? What's the narrative behind this company? What's the direction? But then there's these traders that's very few and far in between. And these types of traders, they define generations. They're legendary. And these are legendary traders because they know technical analysis like great traders. They know fundamentals like dope traders, so they know both. But then they also understand these things called qualitative and quantitative data. But they also understand the risk associated with all of these, right? So for example, they understand the economics, they understand the geopolitical, and they also look for other data alternatives. Like for example, what are politicians buying? Say for example, what type of patents have they filed? Have they received any type of government funding? These are all quants in data. So we've said a lot. We've said a lot. Huh?
Did you take my sign?
No. So with that, let's explore a little bit of this thesis. But before I do that, we're going to look at one of the companies that sits on this list. We're going to play AI. So the best investment thesis in this example would be, say, for example, if you're talking about autonomous driving, we're going to say it's Tesla. So Tesla, and then the other company out there is NVDA. Now, these two are kind of like the dominant players within the autonomous space. But that's if the AI thesis is working. Now, if the thesis is falling apart somehow, some way, for example, autonomous driving is taking too long, but we're seeing strides in AI, but yet at the same token, these companies are struggling a little bit, and the thesis falls back because we still realize that the market still wants AI and they're still investing in it. So then we would look at a company like TSM. And ultimately, the reason why we look at TSM is because though they're not, say, for example, they don't create any AI, but they're the main supplier, they're the manufacturer for a lot of these things to take place, and they work well with both. Now, before I get into anything further, I just want to remind you all that each and every single one of you our ancestors' wildest dreams. It cost them something in order for you to be here today. So with that being said, and Jolene, let me know how I'm doing on time over here.
You're good.
Okay. So I'm going to do something, and I'm going to look up a company. And this is, I'm not going to do anything extra. I'm just going to look up a simple company, just to keep it simple, just to keep it, you know, easy for each and every single person to go out there and explore. Each and every single one of you can do this at home. I'm going to look at that company that was on that list. I'm going to look up NVDA. Now, this is me literally just going to NVIDIA.com. I know a lot of people pronounce it different ways, but it's called NVIDIA. So here's the thing that's very interesting about a lot of these companies, especially within the tech space. You can learn a lot just from just going to their website. For example, the platforms that they're in. Look at the things in which that they supply outside of, say, for example, most folks just know of NVIDIA just for its graphics cards. But from its graphics cards technology, look what it's been able to do. Autonomous machines. It's also been able to do cloud and data center, AI data science, design and pro visualization, healthcare, high performance computing, self-driving cars, and so on and so on. Notice gaming is all the way at the bottom. Now, another thing that they do, these are all the industries in which that they supply. So if I go to, say, for example, let's say if I go to robotics, right? They're there. Everywhere where I want to be, especially if we're looking at the deep learning thesis that many of you have probably seen us go through this example, and looking at Kathy and Ark's big ideas for 2021, deep learning was one of those subjects. I can learn about what is it that they're doing and what are some of the cool projects that they have going on. And on top of that, what is the technology that's also applied to it? That now I'm actually not only learning about what they're doing, but I'm also learning about the industry itself. If I go back and if I look at, say, for example, self-driving cars, now I'm exploring a world of all the things in which that they are in. It helps provide me the narrative. Now, there's some other things in which that I can learn about NVIDIA. Like, for example, I can learn about its social responsibility, the company and its foundation, or just simple company information. The executives, who are they? Like Jensen Huang, the CEO and founder of NVIDIA. And then on top of that, some of the cool projects that they've got going on. But let's go back even further. Let's look at, say, for example, there's a section just for you, the investor, if you want to get to know who they are. You get their earnings, you get their webcasts where you can hear like directly from them and what is it that they project. There's also this thing called their 10 Qs in which they give you access to their financial information. You know, these are all the things that are at your disposal and they're free. So which means that you don't have to go out there and pay somebody to be able to teach you to do these things. It's just a simple matter of you just going on a field trip expedition and exploring the world that's beyond you. And the beautiful thing is you have the power of the internet. Wait, should I show one more thing?
I was gonna ask you, are you going to just leave it there? Because I think
I can go a little bit further. I can go a little bit further. Like when we were talking about NVIDIA, right? So we're talking about NVIDIA. Now, here's one thing that a lot of you don't know. Because a lot of folks like, you know, and it's very interesting where we can kind of get some information here. Like, for example, here's one of the things in which that we'll look at that, but then at the same token, we're going to look at, say, for example, this, because I feel like this is very, very key for folks. Now, I'm not telling you to go out there and buy anything because that's not what it's all about. But this right here is groundbreaking, revolutionary. Now, a lot of folks look at this as like Android TV where I can just watch movies and entertainment. But I want you to look at something here. NVIDIA here makes their own CPU processor. Here, I'll blow it up for everybody. NVIDIA makes its own CPU processor, a processor core with GPU, as well as RAM, all in one. And what this does is not only does it allow you to, say, for example, watch movies and everything else, but this has also become like a straight up console where you can also game through the cloud at 4K, 60 frames per second. So what I'm telling you is you don't even have to pay $500 just to have a gaming console. They're making it easier, and they're literally changing the game within the spectrum of what is it that they do. Like, for example, their GeForce Now platform. This is literally just them gaming through the cloud, and that's supplied by their own tech. Another thing that they're doing is, say, for example, their own AI. So literally you have your own AI center in a box. Just imagine the types of things that a lot of health science places are using to literally compute large quantities of data. Think about, like, say, for example, a lot of the deep learning that's taking place in order for us to push forth innovation. And pretty soon we'll get to quantum computing, but we've got a little bit of ways there. But I mean, it just goes to show you that essentially, you know, all these things are sitting right there on their website.
In plain sight.
Hiding in plain sight. And that was just a small little, say, for example, legendary session for each and every single one of you to learn about, hey, what is this thing here? Let's just do a quick recap. We taught you we gave you a quick brief analysis of the basics of understanding what is options. We also gave you the basics of putting together the beginning of a trading plan. We also gave you the basics of the rolling four strategy. And on top of that, with all those things, the roaring 20s is all tied into that, because when you stick to that plan and follow those pieces, you look around and you create that generational wealth for your kids' kids, and their kids. And then on top of that, we also showed you some little Easter eggs in there. But then at the same token, it's like you understand also how to quantify, how to calculate how, say, for example, options move. And we're teaching you how to be, this is the beginning of how to be a legendary investor. It doesn't get any doper than that.
I mean, it doesn't. I have a question for you from a newer cousin who just hit me up on IG, because our chat is down. They're new, and this cousin they said that they're noticing that a lot of the picks are at a 52-week high already.
Yep.
So is now not the best time to buy in?
There's a simple rule in, say, for example, whether you're stock buying or whatever it is that you never buy at the high. There's always going to be an entry point. Now, the thing is that you also have to look at it is that, you know, a lot of these stocks are going to settle back. I mean, it's just nature. Like, somebody's going to want to take profit, or people are going to want to take profit. And when those days happen, then that produces an opportunity. Some of these stocks could also go through what is called a correction. And so correction is pretty much when they've reached these 52-week high levels, they typically sell and drop about 10%. So you see a massive exodus of folks that are literally just taking profit at this point in time, more so for technical reasons or for whatever it may be. But that creates a buying opportunity for individuals like yourself. So essentially, it's like, that's why I said there's no need for FOMO. It's just more so in the sense of just being patient. The market will always produce an opportunity here. Like, for example, did you know there are companies, even at the top of the list of the Come Up Series picks, that have been in correction all the while that other companies or other stock picks in there have reached 52-week highs? There's even chips in there that are not even trading at 52-week high levels, though that some chips are. So there's always an opportunity somewhere. It's just a matter of just doing a little bit of research and a little bit of exploration, and then picking your spots and then stepping in.
You know what's really key about what you shared is learning how to think when it comes to investing. And the key things that you pointed out was how you approach it, as far as what is, what will be, if, and, or. That right there, that's the bones of this whole operation, of this whole market heist. You get that down and it's game over.
100%.
It's game over. So I encourage you all to go back.
Chat has now officially come back.
Oh my gosh. Go back and watch this episode and start orienting your mind to start thinking about what is going on right now, what went on for these past 2 years, as far as who were the winners, and think of publicly traded companies. I mean, don't just, think of, there's context to this.
Yep.
Then move on to what will be. And you can base that off of your own vision of what the future will be. Me personally, the future is leisure. Okay, so the companies I invest in are all about making my life easier, making my children's life easier. Because Mark, you know how I feel about this. Our ancestors done put in enough labor. There is no reason why the lineage of Jolene GC should have to continue laboring to survive. We should be able to contribute our gifts and talents to this world. And that's how I think about investing. So when I look at it, I think of, okay, what is now? And then what will be? And it's all centered around my perspective on leisure, which is freedom to create. So whatever companies are freeing me up to create, that's where my money goes.
Yeah, I mean, I'll say this, for everybody out there, and I'm going to spoiler alert here. Okay. Here's the reason why my top picks are the chip sector. The reason why my top picks are the chip sector is because of the fact that you can't have a future in AI without chips. If every chip out there is, if every AI bot out there, think about every single AI machine out there, and if you think about it, if you do a deep dive in that NVDA company, you'll find that even some of those like last mile order delivery drones are powered by NVIDIA. Without a world without chips means that essentially it's a world without AI. And we know that that's not happening, because look at how the strides in which that we've taken. From the moments of where we use AI to solve, say, for example, traffic problems, smart cities. We use AI to monitor, say, for example, energy consumption better. We use AI to be able to, process through tons of data to be able to find forth test-based solutions based upon DNA samples and whatnot. We use AI for so many of the different things. My Tesla uses AI that's powered by a chip. And so the world is going to need chips, and hence the reason why we see this huge chip shortage, because thanks to COVID-19, the world became more reliant on electronics. And what's in those electronics? Chips. When we think about also the simple things of, let's say, your laptops became in high demand because everybody's working from home. When we think about vehicles that are being created for tomorrow, or 2030, 2040, then essentially they need chips because of the processing that the vehicle is going to have to do for, say, for example, emergency braking, autonomous driving. So there's a chip shortage there. Now, here's the thing. It's like, some chips are more powerful than the others. Like, for example, if you look at NVIDIA, and I'm going to give you a narrative real quick, just a simple narrative. If you look at NVIDIA started off as a simple graphics card company. They just created graphics cards. But when you think about it, think about the amount of processing that it takes. The next time you look at your games, your video games, or when you watch movies and everything else, that had to be processed. It had to go through post-production. Even just this video of what we're doing right now, this has to go through some type of encoding in order to get to each and every single one of you. And so essentially what they did was, if you notice, the graphics chips from both AMD and NVIDIA are more powerful than the CPU chips themselves, because they're just managing processes of just, hey, I open this application, I process that, I process the application to move it, and then I move it over to RAM. Shout out to Lam Research for RAM chips, as well as Micron. Now, when we think about it, it's like those GPU chips are more powerful than, say, for example, the CPU. Now, NVIDIA, Jensen Huang, caught on to that. And he was like, now that we have this powerful GPU, what can we do with it? we could probably create better solutions because of the fact that now we can embed machine learning into the chips. So now that the chip itself within the graphics card is able to process, and it's also able to learn. It's also able to be adaptive. So it's also able to solve critical problems. Then we start bringing that same technology over into other areas, and then allowing algorithmic AI solutions to be built on top of that. And then thus, this is the world that we live in today. Think about it. Algorithms, graphics to be able to solve large portions and bring in large quantities of problems to process all at one time. Sounds a lot like something that had to look at multiple different images and process those all at the same time in order for them to be viewable on your screen, or for them to be viewable on your console, or for whatever it is. It all started from a single chip.
Now, Mark, you know what's dope?
Yeah.
You have your perspective. I have my perspective. And they all lead to the same point. Mm-hmm. AI, and like I always say, all chips, no dip. And today there really was no dip.
Not at all. I mean, because when we look at it, and I guess we can get into some of the hot takes if some cousins have questions. I mean, I can go a little bit extended if we want to answer some questions. So if they got questions, go ahead and filter it through. I have no problem with that. Yeah, you saw a lot of chip companies wake up, because a lot of them, like a lot of investors, were getting pretty spooked about this supply chain chip shortage. Mm-hmm. And when we think about it, when we see the supply chain chip shortage, a lot of folks got like really spooked and saying, well, this could be like really, really hurt, significantly, a lot of the auto manufacturers. And then we found out that there's only this is only going to affect about 675,000 cars, in the whole automobile landscape of things. And the companies that were already doing what they were supposed to do, then they shouldn't really be significantly impacted, because, they already have X amount of orders that should be placed. So when we think about it, that's like kind of like 3% of the entire market. So essentially it's like, did the market significantly overreact? I think so. And then on top of that, given that there's always, you live in a 24-hour news cycle where it's like that all these companies on the publicly traded market are fighting for attention, then essentially when they leave the chip sector, they're going to go somewhere else. Hence the reason why they're going to hit up travel stocks. They're going to play in places that are defensive. They're going to go to other areas and say, well, how about, this, how about this company? This company looks attractive. And then, like clockwork, they come right on back, because then they realize that, okay, hey, I want to be a part of this because this theme or this thesis fits better for my portfolio, versus me trying to trade out of these things, which I got my temporary gains, but there's not very much more variance for me to go from here and there. But there's way more run room for these companies. Like, think about it. If you think about it like this, I'll break it down for you even further. Let's get some economics into play, shall we? Mm-hmm. So if you think about it like this, if supply is scarce, or if you're dealing with short supply, mm-hmm, for the temporary, but but you know that the demand is high, right? Mm-hmm. Well, what happens for the company? The price goes up. Mm-hmm. So then the question is, do you put that on your OEMs? Probably. And then those OEMs, they move that cost over to the customer. OEMs, original, manufacturer, equipment manufacturer. So essentially they move it over to the consumer, in which that they'll pay somewhat of a premium for the cost. So a little bit of inflation for the cost of the product. And thus it doesn't really significantly hurt their profit margins. And then on top of that, they can kind of make up for, say, for example, loss of inventory. And then when they come rolling back around, when that inventory issue is resolved, then you're going to see a floodgate open, and you're going to probably notice that some of their quarters are going to be blockbuster. Why? Because now you know that they're trying to make up for all the significant demand that they're trying to meet up to. So now they have to go through ramp up times. I mean, a solid way to look at it, right? And here's another thing to look at. Like, for example, folks are saying, well, is the market going to crash? Well, if the market crashes, where is it that investors are going to go? So if the market is going to drop by, let's say, a significant portion, where is it that these investors are going to put their money? Like, where does it go? Like the reason why we saw stocks climb because of the fact that the interest rates are pretty much zero. So there's no point in putting your money in the bank because, I mean, unless you're trying to really fight for that 1 cent that they give you in interest. And then on top of that, you're not going to really go to the bond market because the bond market and treasuries are just crap. I mean, you can't really find any significant yield there. And anybody who's telling you that you can find that, they're straight up capping. So you're not going to find it there. So where did investors go? They went to the next thing. They went to equities. And then you're starting to even see that they're going towards cryptocurrency and a few other places. But it's really where equities is where it's at. Now, the interesting thing is that when we start to see that, like, think about like the simple economics like this. If everything gets so expensive, let's look at California.
Mm-hmm.
If everything gets expensive in California, what does the population do?
They move.
When everything gets ridiculously expensive in the market, what do?
They move their money. So what's interesting about all this, the stock market, like for real, I was going to say low key, but actually high key mimics life. You know what I mean? Like you can go out there and dabble in the flavor of the month.
Yep.
You know, wherever the money's going and make your little short-term gains.
Yep.
But that's not what makes a legendary trader.
Nope.
It starts with the vision and really sticking to the script and seeing like that long term and being able to be 10 toes and hold it down even in the face of a temporary dip. And that's how I see the come up cousins.
Yep.
In general, it's like everyone is assembling. Everyone is, you know, getting their portfolios together, cleaning up portfolios so there are no raggedy portfolios in 2021. And being able to look a dip straight in the face and not flinch.
Yep.
Sticking to your script and then reaping those benefits. Mark, I remember last year when we had that huge crash, right? March 25th.
Can I explain that?
Yes. Let me say this. There was that dip. And I remember what your actual portfolio graph looked like.
Yep.
And how you held on and reap the benefits. So please, if we're on this refresher tip, go on ahead and jog that memory. I wish I had the little, you know, the music.
The harp. Let's replay this conversation back.
Yes.
Interesting thing about, like, for example, when we saw that dip, let's explain that 35% dip, because I think a lot of folks talking about, like, you know, the market crash and everything else, you know, those things are rare and few in between. Now, corrections, they happen, they're healthy for the market because it brings in where some investors look to exit stage right, and at the same token, it prepares the next stage for investors to come in.
The dance.
Like, it's pretty much exactly like a dance. But the interesting thing about that crash, so that way people can understand here, so they can understand the catalyst here.
Yeah.
They understood that essentially that growth was going to come to a standstill. We already knew that there was already a recession on the horizon. We just kind of didn't know that it was going to be COVID that was the catalyst for it, but it really kicked everything into overdrive. And then folks started to realize that, okay, hey, maybe this is a little bit overdone. But in the interim, the reason why you saw a huge sell-off was because of the fact that people realized that GDP, that import, export, and sell of the cost of goods, we realized that those things would come to a standstill for a time being. And with that being said, we also realized that certain countries would have to they would have to add stimulus or quantitative easing to the country, so that way essentially things could still flow and still flourish and move forward.
Mm-hmm.
With that, drove treasuries down because treasury rates dropped to pretty much, I mean, interest rates dropped to zero, pretty much. Who makes the most amount of money on interest rates?
Thanks.
Okay, so now when you realize that banks are literally, they make their money off of interest rates, and when they realize that, okay, hey, this is our moneymaker here, and if you're taking away our moneymaker, they were hedged in other places. So in case these things happen, they can liquidate from other places. So where did they choose to liquidate? Equities, the places in which that they were able to grab profit and everything else and return value to shareholders.
AKA stocks, y'all.
Exactly. So then they sold off on stocks, and then of course it triggered a sale across the entire landscape. A lot of your institutional money sold. And then of course you had some retail money that sold, but for the most part, it was like, all right, we sold. But then something happened there. Then we started noticing that essentially that people were like, yo, this 35% drop, man, yo, this is a deal.
Yeah.
This is a significant deal. You started seeing retail investors that were like, yo, wait a minute, I can buy this stock at this price? Come on.
They were like, let me get in where I fit in right quick.
Let me ask you all this. If you could buy a house today, that house was once upon a time at $400,000, and then that house is now on sale for, let's say, $100,000. Tell me, are you lining up to buy this house? Are you lining up to buy the neighborhood?
I'm getting two. I'm buying a lot.
Some folks are going to be going for the two for the one. A straight up sale. Now, here's the other part that took place. Okay. We also realized that institutional money was trying to step back in. But they kept trying to use some of their same tactics as it pertains to algorithmic trading and everything else. And essentially, they were boosting up the stock because they realized that certain players were going to do very, very well. They were expected to do very, very well in these markets. Hence the reason why. You think I'm capping? Go back and check the tape. Go back and look at Amazon and go and compare Amazon to, say, for example, Microsoft and Apple. Compare those three companies during 2020. You will see a stark difference as it pertains to those companies. Another company, if you like to add it in there, is Tesla. You can add it in there and say, okay, hey, this is what happened amongst these four companies. Now, did it drop? Probably. But did it drop as much as Apple did? No. It kept going. Why? Because the consumer was still there. The consumer was still going to need to buy things. And of course, we can look at the consumer staples like, you know, your Clorox and your P&Gs and all that other stuff. But really, the new consumer staples built into consumer discretionary is really Amazon and Walmart.
It is.
And so when people started to realize that the model itself started changing and that it benefited, the scale started shifting to other sectors significantly. And these sectors were already winners. It just started shifting even further in their favor. Then that's the reason why you saw this huge run up within the stock market, especially within the tech sector and some consumer discretionary and whatnot. And then we also saw some new fintech companies literally start to outperform versus your regional banks and all those other folks. They sucked before they were terrible before the recession. Industrials were terrible because let's not forget, Boeing couldn't even have any planes up in flight.
Right.
So now you've already had your planes grounded because of the fact that they weren't safe. And then on top of that, you slap on COVID and then there goes your backlog. So it's like when we think about it, like if you put it into perspective, notice what I just did there. Everything that I just spoke to you about had something to do with the economics.
Mm-hmm.
The economics tells the entire narrative of the market. Now, do the markets fully reflect what the economy is? And some people, they'll say yes. Most folks will say no. Because we saw a significant recovery within the stock market, but we didn't see that same type of recovery within the actual physical economy, and that's fair. But the thing is like when you know that type of narrative behind, say, for example, like the market itself, then you start to see it. So now knowing, I'll give each and every single one of you a slight teaser going into now that we're in 2021. We see that there's economic recovery starting to take place. We see that there's a supply chain shortage as it pertains to chips within the tech sector, which is literally like starting to, like, it's literally handicapping a lot of other industries. What happens when those constraints start to go away? Who becomes the winner?
Me.
And then who are the winners now? The ones that were prepared or the ones that are already prepared for such things to happen? What industry sectors now look the most attractive as we look towards the future, beyond, like past COVID? Which companies are in the best position to look at, say, for example, now that we are already in the space and we have accepted a somewhat of a new normal, and now that we're building on top of that new normal, and it's coming at a very, very fast pace of what's being adapted, what's also changing, what does real estate look like, and all those other things. Here's another thing to look over the horizon. There's a lot of folks out there that have had their real estate mortgages deferred.
Mm-hmm.
There's a lot of student loan debt that has also been significantly deferred. You know, how did those things get addressed? And remember, who's currently holding the bag for those things right now? I'll give you a spoiler. It's the same people who had interest rates go to zero.
Mm-hmm.
Now, am I saying that there's going to be another crash? No, because this is where legislation comes into play. And the thing that, like, you're starting to hear, which are buzzwords, I'll send it home to each and every single one of you for homework. I want each and every single one of you to study up on what is inflation and how does it work? And when inflation increases, what happens to the stock market?
So that's your homework, y'all. But you know what, Mark?
Yeah.
I lost my train of thought that fast.
So much data.
No, there was something you said I wanted to add to that. It's okay. It'll come back.
Okay.
Oh, this is why, y'all, it is so important to just tune out the noise.
Yep.
You're going to see all these analysts come on here and talk their talk and say, you know, this is where we're headed. No, figure out what your thesis is first. Build that up and see how that holds up, and then take in that information and see if it makes you, you know, consider something else or change your mind or whatever, but have your own thesis first. This whole series, this whole channel is filled with nothing but showing you how to think. And that is so key, because learning how to think is not necessarily something that's taught in school.
Right.
You know, it's a lot of regurgitation. But here at the Come Up series, you have you are given the tools for free 99 on how to think. No one can take that from you.
Yep.
No one. So if you start to, you know, develop what your thesis is, that is your thesis. And yeah, there could be some overlap, but take ownership of that thesis and put it to work. Yep. Have your thesis work for you in the market, because yep, that's what's going to build your generational wealth.
Yep.
And that same knowledge, that thinking, can be passed down. It is an inheritance. So do not squander your inheritance. Put in those research hours.
Yep.
Because every hour spent makes a difference in your portfolio.
100%. It's like you can't execute if you can't think and if you don't have the knowledge.
And it's out there.
Well, technically you could, but it's like, if you really want to be 98%, you know, I always tell people, if you want to be like the rest of the 98%, then keep doing what the 98% does. Because really what they're doing is they're just guessing. They're not taking in any information. They're not analyzing any of the information. They're just taking it and just saying, okay, well, you know, I'm going to invest in Starbucks because there's one on every corner.
It's not enough.
It's not enough. You know, for example, versus I'm going to invest in Starbucks because of the fact that I see that they're getting their profit margins in order. They've definitely been able to optimize for, say, for example, their drive-through as well as their contactless delivery using Uber Eats and leveraging across different platforms, while also not having to do so much on the operating expenses because of the fact that they don't have to worry about, like, for example, in and out. Now, do they need that? Is that potentially a catalyst for some weakness? Yes. But you see how I'm able to put that together as a narrative? That's what each and every single one of you must do. And it doesn't take that much. It just takes a simple amount of time. And here's the cool part. We've already taken a vast portion of that out of the place. we taken a vast portion of that thinking or that thought process out of the way. You can just start off with the picks that came from the come up series. You know, one of the things in which that a lot of folks don't know is that I challenged each and every single one of those individuals that presented in front of you. And there was even people that you all didn't get to see that work on the background, you know, that literally we operate literally like a hedge fund. And the reason being is because of the fact that we challenge everybody to be better every single day. Why? Because when we came forth with these picks, one of the most defining questions that we asked each other was, are you willing to stake your reputation on this pick? Are you willing to stake your reputation on the line for the sake of somebody else's hard-earned dollars? So when we come forth with picks, it's because of the fact that we look towards the future and we say that there's a future that's bright out there for this pick. Now, can we be wrong? Yes. Should you be skeptical of our picks? God, yes. But yet at the same token, you have over 80 hours of content here in which that you can use at your disposal to start your journey on becoming legendary. The goal here is you become a legendary trader or investor.
Let me add something, Mark.
Go
Seriously, for anybody who, you know, is in the comments watching the come up series and you're not doing the work and you're solely coming here for the plays, you won't be able to stay. You know why? You won't be able to tolerate the air. You literally will not be able to breathe. You will not be able to keep up because you're just waiting to be spoon fed a play.
Yeah.
Getting a play does not make a full plate. It just doesn't. It's a snack. And if you're just trying to nibble on something, on, you know, some quick profits, do your thing. But if you're trying to eat at this table, you're going to do the work. You're going to show up and bring a quote unquote dish. Okay. So, and that man, yo, and not only will you be able to feed the people sitting at the table, you'll be able to feed the people in line, standing in line, trying to get to the table, trying to get to where you are. So if you're out here just looking for plays, yo, you come to the wrong place. We roll up sleeves around here.
We do. All right, Jolene, we've gone on for an extended period of time. So
we have. It had to be said.
This is part one. I mean, when we get to the next legendary series, and these are going to come few and far between, but the reason why we believe in legendary series is because of the fact that it's kind of like a reach back, and ultimately it's there to bring you up to speed. It's there to give you a lot of data. And then on top of that, we believe here at the Come Up series, it's like, this is not a stock club or anything like that. This is literally just a place for you to learn. And so we believe in making the data human. You know, if the data can be more human, and if essentially if it's digestible, so that way it's as if we're sitting down and having a conversation in the barbershop or at the dinner table, then we've done our job. We have truly, truly done our job. That to me is something that's legendary. Our goal, that what we set out in semester one, is, can we make investing and financial literacy cool? I think that we've succeeded at that. The next goal is, can we make people free?
Yes.
Can we help set people free? Can we give them the knowledge that helps set them free? Can they no longer be, say, for example, the classified underrepresented groups when it comes to building generational wealth, or when it comes to being in the financial landscape, or say, for example, being considered at the lower end of the totem pole when we look at census data? Can we change that? Yeah. And the thing is, we can do what we do, but we need each and every single one of you. You play a part in this.
Absolutely.
For you parents out there, don't do it for us. Do it for yourselves, do it for your kids, and do it for your kids' future. That's the reason why we do it. There's no beef and everything else with everybody else out there in the world. It's like, we don't have time for that. You know, our focus is literally to make sure that each and every single one of you are well equipped to literally be able to say, okay, hey, I have the tools to make solid investments where I don't have to rely on, say, for example, folks out there that want to manage my money and everything else. No, you should be able to manage it yourself. Now, if you choose to still allow somebody to manage it, that's fine. Now you can also be more hawkish and be like, yo, how's this clicking? How's this coming along? Whatever your strategy is, that's you. But the goal is like wherever your road to freedom is, our goal is to help you get there. And we're going to do that. And like I said, if we end up pissing some folks off in the process, don't worry about that. We don't. We really don't. You know, there are folks out there in whom which that try to monetize off of what is it that we do, or to, you know, to repackage or whatever it is. We don't care about all that. We don't. What we care about is, are each and every single one of you learning? Our focus is, are you being equipped with the tools? And if you are, we've done our job. And the best repayment in making this free is that essentially that you go out there and rebuild those communities so that way they no longer look raggedy or whatever else it is. Build the future that you want to see for your kids. And that, to us, consider that payment in full. Or each one teach one, payment in full. So this is kind of like our war cry to each and every single one of y'all tonight in the history, and we're making history tonight. Like I said, what you saw on Tuesday night, you're going to get used to seeing more of that. That's power. You're going to get used to seeing that. We believe in developing and bringing in our own talent. Yeah, we may bring in some pretty cool folks that represent the industry and everything else. And they will be able to provide more information for learning purposes, anything else. We get that part. That's dope. But what we also believe is, we believe in showcasing folks in whom which that come from this. So that way you all become more inspired to say, okay, hey, this person is here, I can do this. One of the interesting things about those folks in that group that was on Tuesday, they all started watching the Come Up series, and they all started from ground zero. And that's where they are today. If they can do it, you can do it too. I think next week, Jolene, I think we're going to introduce the Matrix game to the world.
That'd be dope.
So that way families and everybody else can literally start to play the game. Because I believe that, like, just like we did the if and or, we're going to start bringing out more of the Matrix games for each and every single one of you. So that way you can start being legendary. All right, Jolene, anything else? Because we've gone on.
Nope.
All right.
I'm trying to get my research on that post show, you know.
Okay.
That's why I'm trying to wrap this up. Okay, guys, I got things to do.
Okay.
I got money to make.
Oh, okay. Well, until next time, I'm Mark Monroe.
And I'm Jolene GC in a place called Free.
And we'll see you next Tuesday. This has been your Come Up. We love y'all. Have a good night.